Hello everyone, this is Christian from TradeVola, and I want to present you today some really important topics regarding hedging your accounts, especially if you invest in a different currency than which you consume. It's very important to know how to hedge, which tools you can use, and what are the prices or what are the fees for hedging your portfolio. This and many other things we want to show you soon here on the screen. Just to give you a short overview, I mean, you can hedge your portfolio, of course, with ETFs, with Forex pairs itself, but also with future contracts or even with options. These are some tools which we want to present you here on the screen. And like I said, it's mostly important if you consume in a different currency in which you invest, and this can be, for example, US dollar, British pound, or Swiss francs, and maybe you consume in euro. I think then you need to know all the information about hedging, especially if you see the last months where the euro really went up comparing to US dollar, and especially in this time, US dollar stocks also went up a lot, and you might miss a very high percentage of your performance, but this like many other things we want to present you here on the screen. So I hope you will find some necessary information for your own portfolio, and like always, feel free to leave a comment, also a like, and don't forget to subscribe to our channel. And now we want to have a look here at the screen. Yeah, here we are on the client portal, and the most important before we start to discuss the different options, how to hedge your portfolio if you trade in different currencies or if you have positions in different currencies than your base currency. And this is which account type you chose, a margin or cash. For this, you can also check the video here in the corner above. Because if you have just a cash account, the next options which I will show you are not available for cash accounts. Most of them are only available for margin accounts. But let's get started. Which different types of a hedge I can set up here within the active broker. First of all, I think there's a Euro Future contract. I think this is also the most common how to secure your portfolio if you invested in US dollar and your base currency is euro, but you can also do it, and I think this is also good for smaller accounts with spot contracts, forex contract, just basically the euro US dollar. And at the end it's also possible with CFDs, but this I don't recommend because the fees are quite high, which are included in the CFD already. But you can also do it with options, just simple long calls on the euro. For example, you can also trade, I think, with some cash accounts, or you can do it also with an ETF. That's also a possibility. And I think for the start, to explain how big the difference is if you don't hedge your portfolio, we can just use one symbol, what I also showed you in the last video about recurring investments, what you also can check here in the top of the screen. It's CSPX, what is an ETF, what is tradable also in the European Union without any problem. But even it's traded in the UK, the currency is US dollar. So if you are having base currency in euro and the euro went comparing to the US dollar much up in the last few months, then the performance will be much worse than, for example, hedged ETF in Euro Hedge. You can choose here, for example, SPPE. It's tradable in Germany, and here you can see the end already the name. It's Euro Hedge, and now the most important, if we compare both performance in euro since the beginning, it's almost double what you see in the ETF, what's a hedge in euro. So if you invest in ETFs, and this can be also, like I just mentioned, recurring investment plans, then also take care if it's US based currency ETF, then maybe you find also a very good hedged ETF, but for the S&P is quite simple. But for stocks, for example, you will not have this. And for this, it's important to discuss the options, which I said, futures. We can have Forex contracts and options. And yeah, options, I think it's the less common thing, I think, to hedge, because not everyone has the permission to trade options or the knowledge. And you also have same like what we will see now in the future contracts at the end, the expiration date. And it makes, from the cost structure, the hedge more expensive if you just choose the Forex spot. Let's do an example. I think for the Forex, it's quite easy and simple. If we click here and we choose just Euro USD, and we want to do an example for 20,000 US dollar. Let's say we have an investment of 20,000 US dollar, what we want to hedge for increasing euro. And here it's pretty simple. I think it's approximately, you just have to divide this with the price here, 1.16661, and then it's approximately 7,200 euro US dollar what you need to buy to secure this $20,000 which are invested, for example, in stocks. And you can also check the preview of the trade or just submit it here. I think that's the easiest way. If you have the permission for Forex trading, just use here the Forex spot at a Euro US dollar spot price, and it's also accurate if you need a smaller amount. I think for bigger amounts, then also options, and for example here futures are quite interesting. The smallest one I think is here the symbol M6E. You can see here Euro US dollar, and here we have the expiration. So that's also a very important point. Always at the expiration date you need to roll the position for the next 3 months, or you can already choose here the next expiration date and trade it from the beginning. It doesn't make a big difference. It's normally a little bit higher from the price, but at the end, if you roll it, you also have to accept a higher price at the moment when you roll from September to December. And regarding the coverage, one contract is equal to 12,500 euros, and that's already the important thing to secure here exactly my 20,000 US dollar. I have to go a little bit higher because it's only possible to trade full quantity. There's no so-called fractional future contracts, for example. So in this case, I know, as my investments will also grow most probably, that I will choose then the quantity of approximately 25,000 euro in US dollar, that even more. And to make it really correct, like I said, the first option with Forex is, I think, much better to make a certain amount. Next to Forex and futures, as I said, we also can do this via options, where you just buy a call option on the euro, or you sell a put option. But I think this will take a little bit more time for explanation, so that you can really concentrate on these two things, futures or Forex, to hedge your portfolio, especially if only if you invested in US dollar. And don't forget the example what I showed you at the beginning. It's exactly the same underlying. It's all based on the S&P 500. And I think the cost structure, what I also mentioned in the last video, is also nearly the same. And we have this big difference here in the performance. And this can also, that's just an example, happen of course in any other currency. If we talk about the British pound or Swiss franc, then you need to do literally the same, or what I explained here for the euro. So these are all the tools you can use. Maybe there are also some more, but I think this is the most common tools for hedging your portfolio regarding or related to currency exchange rates. And like always, don't forget to subscribe to our channel. I will be happy if you leave a comment or any suggestion for next videos, and I hope to see you soon. Bye bye.